I'm Harvey Wendell,
And I'm Whitney Thompkins.
and this is Backyard Dollars. Whitney, I saw something online that grabbed my attention, and that's why I had to contact you. And it was a flyer with the statement of nothing says I love you like life insurance, like life insurance. That is a bold claim. I was like, that's a bold statement to say something like that. What prompted you to make that kind of statement? Why do you think that?
I actually made a bolder statement yesterday.
Oh, did you? What was that?
I said, you say your children are your world, but you don't even have life insurance. Like your children are your world, right? But you don't even have coverage that if something happens to you, they're going to be protected. It doesn't make sense.
Yeah. So what? Okay. So your specialty is life insurance,
Mm-hmm.
and you own your own company,
I do.
and you primarily deal with life insurance.
Yeah, so I do life insurance, and primarily it's with life insurance with young families. So individuals who have, children probably between like 1 and 10. They're growing, their family is growing. There is a lot of transition. We need to make another step. We need to add more coverage. We need to protect, but don't know exactly how to do that.
Okay.
So that's where my niche is. But in that, I'm becoming, now I'm insuring their parents and their grandparents and the children. So now it's like kind of becoming the entire family, which at the beginning, I called myself your family's life insurance advisor. But then I ended up niching down to the individuals who were closer to like my own personal situations. I have a 3-year-old, I'm married, and now it's kind of ballooning into something bigger.
Okay. So with life insurance, before we get into how important life insurance is, what made you decide to go into life insurance? Like, where'd you go to school? What high school did you go to?
So I went to River Ridge High School. I grew up downriver.
River Rouge. Okay.
Yeah, so I did grow up downriver. River Ridge High School, maroon and white. Literally, maroon is in my blood.
Oh,
We are like diehards.
Yeah, downriver, I'll tell you. Y'all something else.
So, and then I went to college. I went to college for business. So
Okay.
I have a marketing background, actually. So it kind of helps with what I'm doing for sure. And I took a marketing job for an insurance company.
Okay.
So I took this marketing job, and when I took it, insurance isn't interesting. So it was 1,000 things I could think of that I would rather market than insurance. But it was good money, and it was a good opportunity right at that moment. So I said, well, Whitney, give it a year. Just do it for a year, stack your money up, and then go somewhere else. And literally within 30 days, and I saw how they moved, and I saw the individuals who were coming in and out the door, I said, I have something to learn, even if it's just for my family.
Okay.
And I stayed there for 6 years. That 1 year turned to 6 years.
That 1 year turned to 6.
Mm-hmm. And my boss happened to say, like, hey, do you want to get your insurance license? And I was like, okay, I'm not going to pass up on a license. So I was like, okay, I'll get the license. And once I got my license, once I was doing the training for the license, and I start debunking some of the thoughts I had on life insurance, I realized that it was a place for me to talk about this within my community.
Okay. And now I do understand, too, that you decided to step away from working for a big company, which obviously money was good, benefits were good. Mm-hmm. You decided to step away and start your own business.
Yes.
Not just that, but you decided to focus primarily on inner city, on minorities.
Yeah.
Selling life insurance to
Right.
minorities. So what I'm trying to get at is you're in marketing.
Yeah, it wasn't a good move.
No, from a marketing standpoint.
Yeah.
So why that move then? Why do it that way?
Just because of me. Like, I'm always trying to help people. I had a nonprofit where I talked to girls every summer for 6 weeks. I did that for 5 years. Okay. So I took 6 weeks out of my summer. I worked for a school, so I was off during the summers. And I would take 6 weeks to mentor teenagers from the ages of 12 to 18. And so I've always wanted to help people. I always wanted people to be better. Growing up, I used to see like women And I was like, oh my God, I want to smell like her. I want to look like her. I want to make a difference like her. And I realized that my mindset to have that, to even look at individuals who were older than me and say they had something that I wanted, was something that a lot of girls don't have that opportunity because of their circles. So if they never have an opportunity to see someone that they could even say, I want to be this individual, or I want to mimic this individual, then who do they have to mimic? So I wanted to give them something good to mimic. So that's just a part of who I am. I'm just someone who wants to help. And in my old role, I remember thinking like, man, I'm just making the rich richer. Like it was great. The money was great. Everything was great, but it wasn't fulfilling. And I needed to be fulfilled. Like the money, that's good, but I understand money does not buy happiness. Like it's a fulfillment that I needed. And it was tough. Like exactly what you said. I remember going to an event with insurance professionals,
Okay.
Black insurance professionals. I'm part of the National Insurance Association, African American Insurance Association. Shout out Naya. And I remember going to this event downtown Detroit, and we were all talking, and I was at this time was the only life professional that was there at this event. Everyone else did like property and casualty insurance, and they were like, "Oh, what are you selling?" I said, "Life insurance to Black people." I was like, "Yeah, oh, good luck." And now this
Wait, who said that?
the other insurance professionals like telling me good luck trying to sell life insurance to Black people.
I mean, in a way, though, they're kind of right.
They're not though, because I'm having a great year.
So,
Like,
and I'll put it like this then. The reason why I say in a way, though, they're right is because, like me, I had to find out for myself. There was no one around to tell me what the value was in life insurance.
and I think that was where they were right. Selling life insurance to Black people is difficult. Educating Black people on life insurance is easy. And that's
100%.
what I did.
That you're right.
So that was the easy part. I wasn't trying to sell life insurance to Black people. I was trying to educate life insurance to Black people. And it became an easy sell.
That it is easier that way because once I had to, there was no one there to say, hey, you need this and this and that. So I had to figure it out myself. So I bought a few different life insurance policies. And whenever you talk about insurance, there is this misconception of I'm never going to use it, like auto insurance. I pay my premiums for like 4, 5, 6 years, never been in an accident, but my premiums keep going up and I still have to pay this. So death is inevitable. But a lot of us don't see the value in life insurance. So how do you overcome that objective, especially in the inner city when obviously other professionals are like, yeah, good luck. So
Yeah.
they're shying away from it because it's a task. So how do you overcome that?
I don't mind the task. That's the first part. And then the second part is we're protecting other people's assets. You just mentioned your car insurance. If something happens to your car, I'm pretty sure you probably pay car note on your car insurance.
Yeah.
So guess who owned that car? Your finance company. So you're protecting their asset, and that's why they require for you to have car insurance because they want to protect their asset. Same with your homeowner's insurance. They want to make sure you have insurance on your home because they want to protect their investment. The financial company invested in you buying your home, and they want to protect that. We have our families. We have children. We are our children's biggest asset, and we don't protect it. So we're so focused on protecting other people's assets that we don't protect our own.
No, you're right. We don't. And some of us, they think that, I know at least for me, when I purchased my policies, I thought I had to have X amount of money. I don't know what the pricing matrix is for coverage. So I was just trying to figure out how much coverage I needed and versus how much I was making. So I didn't know. And then on top of that, I'm like, it's insurance. I'm assuming that I have to buy an insurance policy at another couple $100 a month. And then come to find out, I found some policies for as little as like $20 or $30 something dollars.
My
Is
first
that
policy
true?
was $8. My first life insurance policy on myself, I was 24 years old. At that time, I was not married. I didn't have children. And I had a $100,000 10-year term for $8.
For
And-
$8?
For $8. And I literally purchased it because I had just bought a new car. You know, I'm 24. I live on my own. And I said, well, what if I pass away? I don't want my parents to have to figure out what to do with this car. So I bought a life insurance policy enough that they could pay off the car and that they could take some time off of work to grieve, because I knew that they didn't have the finances, like just sitting in a bank account where they could take months off of, especially my dad, he's the breadwinner. My dad could take months off of work. And I didn't want him to have to jump back into trying to take care of his household when his life has been shattered. You know, losing a child is shattering, you know, so.
It is. It is. It's life altering.
Yeah.
And I do remember talking to you a while ago, and you stated that another reason why you got it was because you wanted them to take the time off work to grieve appropriately. Because bereavement time for some employers is like 5 days.
No, all employers.
Yeah.
So when you go beyond that, it's you going into your vacation time,
Yep.
or people are lending you their time, or you're going into like FMLA. Like bereavement time across the board is 3 to 5 days. That's in general. Like that's not some jobs do 7. No, it's 3 to 5 days. Now you do have jobs who are more lenient, who
Correct.
understands, and they might say, well, we'll give you 2 weeks off of work or 3 weeks off of work. But eventually, if you want a paycheck, you're gonna have to go back to work. And that is, you know, just in a community, we're so far behind with everything. And we don't realize how important it is to put those things in place, that when something does happen, we don't have to get further behind, because now we're carrying the weight of grief, the weight of pain, the weight of everything else, because we didn't have the right things in place to make sure that our family could get the help that they need.
Yeah, I definitely agree with you on that 100%, because when my father passed away some time ago, my sister was his caregiver, and she took care of everything for him. And fortunately, my father has some things in place in the event of his passing. That being said, funerals and burials, it's a business. They still want their money. Okay, you're crying and everything. I understand that you're heartbroken, but they still want to get paid. And it's kind of difficult to pay them with money that you don't have, or that you got to wait for your next check. So with life insurance policy, obviously I assume it's easier and it alleviates a lot of that burden as far as trying to find out where the money is coming from, and instead doing like a GoFundMe or something like
It
that.
does. It does. That's eliminated. You know, that burden is eliminated. Where would the funds come from? You don't have to worry about where are the funds coming from. But then you do have to be careful, because a lot of times, like now, individuals are, final expense policies used to be like $5,000. So individuals will have like a $5,000, maybe even a $10,000 policy. Now, final expense policies, people are getting a little bit more. So $10,000, $20,000. You're not going to the funeral home and tell them you have a $20,000 life insurance policy. They're going to use every bit of that $20,000. Like, seriously, that is like, we're missing it. Like when I said having the time to grieve, we think the larger the policy, the larger the funeral. Yeah. And that's not the case. The larger the policy means that you can now you can pay off some of your debt. You can go back to school. You can do some of those things that you desire to do because your loved one had looked out for you and left you something. So I think that that's where we go back into the education piece. Like the funerals don't have to get bigger. The funerals can stay at that $5,000, $7,000 price point. And now we can take those funds to go on vacation or do some things that we weren't able to do because we didn't have the access to that type of money.
Yeah, I appreciate you saying that part, because that is yet another assumption is, okay, so he's got this $500,000 policy or $1 million policy. Well, we're going to have a crazy burial and a crazy funeral. And that's not necessarily the case. That's just something left over for you all to enjoy and live your life. So I appreciate you for saying that part, because a lot of us assume, hey, just go big or go home type thing. When really, I guess it's left up to us to enjoy and pass it on. So let's back up for a little bit here. You decided to leave your company and start your own.
I did.
And then you just said not too long ago that you were doing very well. And your clientele is predominantly
African
minorities?
Women.
Women mainly?
Yeah.
Okay, so then here's my next question. How many chargebacks have you had though?
Not many. Not many. So my first year was horrible. My first year was horrible. I'm being honest. So my first year was horrible, but that's because I wasn't being true to my target demographic.
Okay.
So when you first get in the industry, like I said, the insurance producer that I worked for, we weren't doing life insurance. We were doing a component of life insurance, but we were majority doing annuities. And annuities is basically like the rich man's retirement plan. Like, these people already were wealthy. They were, putting this money in their policy. So life insurance was new to me, to be honest. Like, it wasn't like I was in a life insurance, just a life insurance environment.
Okay.
So when I decided to like step away, now I kind of forgot the question a little bit.
So what I asked was how many chargebacks
The
you've had?
chargebacks, yes. So my first year, I wanted to surround myself by life insurance people because I wasn't in that environment originally, right?
Mm-hmm.
So then I put myself around those people, and they start telling me what I should do. Oh, you should be doing final expense. Oh, you should be marketing to these people. You should be doing this, and you should be doing calls. You should be running ads. And I started doing those things, and I would get the business because they were right. This is the way to get business, but I wasn't building relationships. So you had individuals, and then especially, unfortunately, and no offense to anyone in the demographic, but when you start getting at the 60-year-olds, 70-year-olds who never had life insurance, they don't want life insurance. So they'll get it because it's something good to do because they know they should have it, but it's not priority to keep paying on it. So if that's my demographic, I'm going out there, I'm going to get a lot of chargebacks.
Oh, yeah.
Because every time a bill gets tight, the first one they're going to cut off is the life insurance policy. So I did have a lot of chargeback, but this year, not many at all. Not many at all. Like, I probably can count on my hand. And I've had probably 60 new clients this year.
What would you equate that to? Because there are some people that are saying, well, I'm pretty sure those professionals are saying good luck because they're having a hard time believing the inner city clients, the minority client will pay. It will pay on time every time. So what were you able to do different to retain on-time policies and showing people the value in it?
Well, one, I put myself in their shoes. So one, I educate. I make sure they understand how important it is. I let them know what grace periods they have. So if it does get tight, you have 30 days. You do not have to rush. And that's across the board. Any policy, you have 30 days to make that payment with no lapse in coverage. So I make sure I'm educating them on the front end. And then I'm also sending reminder emails. Hey, don't forget your life insurance policy is due in 3 days. The payment's going to come out. So I do what I would love for someone to do for me, and then the demographic of the individuals that I'm marketing to individuals who are sick or tired of being sick or tired. These are individuals whose parents didn't have much and they want more for their family. These are individuals who are prioritizing making sure that if something does happen, that their children are protected, and if something happens, God forbid, to their children, they are protected. And that's important to them. So the generation is different from our previous generation on how they view things like life insurance.
So let's talk about the different types of life insurances, because there's whole life and then there's term. And there's probably someone watching trying to figure out which life insurance is best for them. So for me, I do have a few policies. I do have some whole life and some term policies. What I was sold with for the term policy was the advisor told me that it was more like a forced savings. So every time I pay, at the end of the term, I can either take the money that I paid and buy another policy or just get that money back. Mm-hmm. So that's kind of like a forced savings. And then the other one is I'm protected for my entire life, so to speak. So when there's someone out there and they're weighing their options, term life, whole life, and the value in that, what do you say to them?
Well, first I would say there's two main types of policy, and it wouldn't be term or whole life. It'll be temporary and permanent. Okay. So a temporary policy is a policy that is not designed to last your whole life. That is your term policies, your work policies, your policies with the credit union. It's something outside of you making your payment that will determine if you have this policy. Time, employment, being connected with this organization. Permanent policies are policies designed to last you your entire life. Now, I said design. There's things that you can do with a permanent policy where it won't be permanent, but they're designed to last you your entire life. What you mentioned about a forced savings, you have a return of premium term.
Okay.
That isn't common. So I just want to make sure people know, like, terms are not forced savings. Terms are policies that are for a particular amount of time. So 10, 20, 30 years. If something happens during this time, they'll pay out your policy to your family. I look at term policies almost like just in case. It's like, God forbid, if this happens, I want to make sure I leave my family X amount of dollars. Where we tend to go wrong with term policies is they tend to be very large, which I get. You know, we say, well, if something does happen, I want to give my family $1 million, $2 million. But think about the risk assessment. The reason why term policies are so inexpensive, not yours, because you have return premium term.
Yeah, I left up on that one, but okay.
But in most cases, term policies are inexpensive, and that's because term policies, the life insurance company has done a risk assessment. They say the odds of you passing away is low. So we will give you $1 million policy for $30, $40, because the odds of that happening is slim to none. So from you taking that information from your viewpoint and you say, well, that $1 million policy would be great just in case something does happen. But after this term, I have nothing. So why won't I then maybe reduce this $1 million to $500,000? Because it still is enough that the house can be paid off and it'll give my spouse enough time to figure out what to do next. It might not give them enough time where they don't have to work ever again. But most people will not work again. You know, most people will need to get themselves back busy. But give them enough time that they can figure out what's next. And then put that other portion of that money into a permanent policy. So when that term runs out, you have something left.
Okay. Yeah, I'm glad I got the whole life also a few times.
No, the whole life is, in the whole life, permanent policies look like whole life policies, universal life policies, IUL. A really big one that I do a lot is GULs, guaranteed universal life policies. So these are policies where they're going to last you your entire life. As long as you make your premium and you're not mismanaging the cash value in the policy, it's going to last you your entire life. And to be honest, that's the first policy we should own.
Is that right?
A permanent policy.
Permanent policy.
A permanent policy should be the first policy we own, especially for individuals who have no children, who are not married. That should be your foundation policy. It should be the policy we're buying for our children.
Okay.
So then when they become spouses and parents, then they can buy the term policy to be that protection just in case, because their foundation policy is already laid. No one builds a house and don't lay the foundation first.
That's true. Yeah, that is 100% true. And even with the whole life, now, is there a way to get cash value from
Any
that?
permanent policy is going to have cash value. So cash value would be, so when you make your payment, a portion covers the cost of insurance and the remaining goes towards the cash value. So like with the term, it's so cheap because you're only covering the cost of insurance.
Yeah.
But with the whole life, it's more expensive because now you have money going in towards the cash value. And that cash value begins to be like equity in the policy.
Is that right?
So if you have a $200,000 policy and you have $100,000 of cash value, you have $100,000 of equity. So now you can leverage that equity, pull it out the policy, do whatever you need to do with it, and then put it back in and rinse and repeat and do it for your entire life. And
Any
that's
penalties or anything with that?
No, there's no penalties. It's a loan, so
Right.
you do have to pay. It's almost like a HELOC. You know, you have a interest rate on it. But what's different between any other financial vehicle, when you borrow from your life insurance policy, the money comes from the insurance company. They don't take the money out of your policy. So your policy is still earning interest on it because the money is never technically taken out of the policy. So you could very well earn more money in the money that's in the policy than what you're paying back on your loan.
I did not know that.
Mm-hmm.
I've got all these. I did not know that,
Mm-hmm.
and I've been paying on what. I'm going to look into that because the cash value aspect of it. I'm sitting here kind of baffled right now because I'm going through the policies that I currently have, and I'm
Especially
like,
when you have had policies for like 17 years.
yeah,
These policies for sure has a significant amount of cash value. And individuals, like for instance, Walt Disney, he wanted to open up an amusement park. He went to the banks, they told him no. They did not believe in his vision. He remembered, hey, I got a life insurance policy. He borrowed it from his life insurance policy and opened up his amusement park.
You lying right now.
And that's the thing. If people think life insurance is going to make you rich, life insurance is going to make you rich, but life insurance will give you some leverage
Yeah.
where you can become rich.
Yeah, clearly, Walt Disney is the man right now.
And then even it's not taxed. So when you take these loans out, you're not even being taxed on them because it's a loan. It's not a withdrawal. So you're not even paying taxes on the interest earned on this policy. Like in your 401k or any other financial vehicle, you have to pay interest on money earned, even in a savings account, high yield savings account. You pay taxes on that interest. In a life insurance policy, you don't pay taxes on the interest.
Okay, so your clientele that you have, are you explaining this to them?
Absolutely. Absolutely.
Because, I mean,
my clients ain't going nowhere.
I mean, no, I'm not knocking my advisor. I love you, man. I appreciate it. You got me right, clearly, with a few policies, but it was not broken down to me like that, though. As far as the permanent policy, it was never broken down to me like that.
And it has to be a significant. So there is some people who I put in permanent policies and I say, hey, don't touch this cash value. Like I tell them, don't touch it. Because this is not why we're putting you in this policy. We're putting you in this policy for the death benefit.
Correct.
And I don't want you to be in a situation where you start pulling the cash value because I know it's not going to build a significant amount of cash value that they're going to be able to put it in investment that's going to be able to allow them to pay back on their policy. And I don't want them to be in a case because if you don't pay back your cash value, what happens when you have line of credits on your homes and you don't pay them back? When you sell that home, they taking that money. So on your death benefit, when you pass away and you got all these outstanding loans that haven't been repaid, they're going to take that out of the death benefit before they pay it to your family.
I got you. Yeah, no, that's clearly not what I'm doing. I'm not doing it for that. I got my first policy when my first child was born. And I looked into if something were to happen to me right now, would mommy and baby still be able to maintain the lifestyle that we had? So that's one of the reasons why I got the life insurance policy.
And if you would have came to me and you would have said exactly what you just said, I would have put you on a term. I would have not put you in a whole life.
Yeah.
Because what you just told me was, can mommy and baby sustain the same lifestyle? One, I know you want a large policy, and two, I see it's for a particular amount of time because your baby won't be a baby forever. So I would rather put you in a large term policy to make you accomplish that goal. And then have that foundation policy for after that. After baby isn't a baby anymore. After the home is paid off. After you both are retired so you don't need your income replaced.
So you're actually, I see why now that you're not getting all these chargebacks and people enjoy dealing with you because you're breaking it down. It's not just here's this policy, that policy, take your pick. Like you're actually hearing people out and saying, okay, what's best for you and what you want is, I didn't know it was like that. I kind of figured the only thing that would be like that would be like a loan or buying a car. Like if you have a family of 6, why do you need a 4-door car? Then here it is. You're like, no, policy insurance, life insurance is the same way. Depending on your lifestyle, this might be good for you. That might be good for you. So with this information, which I'm sure you've come across because you were working there, it being withheld from minorities in the inner city, is that intentional?
It is. Originally, it was called a race rating. So Black people were rated more for their life insurance. So like you have smoker ratings, you have people with high BMI ratings, you had race ratings. So Black people were charged more because they weren't living as longer. Why aren't we living? Because you guys are killing us. But it was a race rating. So now you have individuals who are, we not too long out of slavery, we still have discrimination. And now I can't protect my family adequately because now I have a race rating. And then they got rid of that in the 60s. So this is the 60s that was gone away with. Well, you have big life insurance companies, and they're big now. Still some of them companies who found a way to say, well, if you're an insurance professional and you're selling big policies to Black African Americans, we're not going to pay you commission.
I'm sorry. What did you say?
We're not going to pay you commission if you sell big policies to African Americans because even though it's against the law for us to rate them, we don't want to sell these big policies because we know we're going to be more likely to pay them out.
Wow. Oh, wow. Okay. And when you said the 60s too, I do remember the years. Obviously, I was born in the 80s, but even then, even in the 80s too, but they were marketing like life insurance policies like on infomercials, on TVs and stuff like that, and people would buy them, and then people would say, well, it's a scam because I bought this policy and my loved one passed away and the policy didn't pay out. What was the deal with that?
So even to this day, so let's go back to the 60s where individuals were, you had the insurance man that came to the house and picked up the check or the money from grandma and granddaddy. So the insurance person would come get the money from our grandparents, and that was how it was. They would write a receipt and they would give the receipt. It was no paperwork. It was no portal. Technology wasn't where it is now. And you had people paying for their policies 3-4 times over. Like, policies should have been paid off, but the man keep coming to the house, so the parents keep writing a check. And that was where people was having issues, because it was like, my loved one has been paying on this policy for 60 years and it's only $10,000.
Yep.
And that's because things were not regulated correctly. And I'm writing something right now for the Black community about life insurance, and I say, like, it's not our fault. Like, our views on life insurance is not necessarily our fault. It's been a mess. But now we've transitioned to technology where we have, life insurance is the only insurance where they don't look at your zip code. They don't look at your race. They don't look at, like, you're not going to be redlined because you live in the inner city. You're gonna pay the same thing as someone in the suburbs. Now, we can go into deep stuff like, access to quality foods and stuff like that, which is gonna affect your BMI, which then will affect your rating. So then you can snowball into it. But in the most part, when you're just looking at like demographics and race, you're gonna be paying the same thing as someone in West Bloomfield, because they don't look at that. Only insurance that does that. So we're in a position where we could really get ahead with life insurance, but because we don't know, we thinking we're still operating in the same system from the 60s, and it's not that anymore.
Yeah, and then that does kind of bleed over, and it gets passed on.
Systematic, for sure.
Because you want to do it, but mama and dad was like, nah, don't do that because this is what happened to me back then. So now that you're independent, are you running into problems like that with big insurance companies when you start writing your policies, as far as if you sell here to these individuals here or those individuals there, that they will or will not?
No, I don't. You don't have those. Now they want the money. So
they just want the money.
They want the money. And then now you don't have that race. You don't have that race thing where Blacks are dying so much faster than other races. It's not the same, we're in a different time frame. So I'm not running into the same thing. I do. I give them insurance companies. That's how, like, kind of giving you a little bit of pushback, like, well, no, I do the same thing with the insurance companies. Like, sometimes they'll say, well, I had a lady, she did a policy for herself, and they're asking about her husband's income. I'm like, what does that matter? Oh, no, never mind. It's approved. So I get pushback, even with different diagnoses, like, oh, well, they were on this medication. Like, well, that's incorrect. There's so many things that comes up because sometimes prescriptions are mixed. Like, you have juniors and seniors.
Yes.
Where the senior is on the medication, but it's, for some reason, when they pull the MIB, it comes up on the son's report. So those are things where you do have to give a little pushback, and you say, well, no, that is the dad, that's not the son. So there's times where I have to give pushback, but life insurance is so great. It's so powerful. It can literally be life-changing within one generation if done correctly. And that's why I find it a privilege to be in this space, because I'm in a space where people have not been educated. I'm in a space where literally there's millions of insurance agents, millions. telling people anything just to get selling anything just to get a sale. And I'm able to like be loud and bold and say, stop, no, don't do it. Like, you have too much. Like, I've told people, like, no, like, you're spending too much money on this. Like, it's too much money. I literally just did a policy for a lady in California. So my shameless plug, I'm licensed in over 20 states.
You go, girl. Okay. Black girl magic. Go ahead.
I just helped this lady in California. She had 2 policies, working on a 3rd policy. She's paying almost $400 on life insurance. I did 1 policy to do everything the other policies was doing and saved her $200.
Wow. Wow. And wow. I'm speechless. I'm baffled at that.
But it's those,
because how long was that going on before you came along?
I mean, years. It was years. And it was just, like different, like the pushback thing, like different things where it's like, oh, well, they gave me smoker rates because I use topical CBD. Like topical, like what? No. And literally no, like that's not okay. And I'm going to push back on that. And then if I get a no to that, I'm going to move to a different company. And that's the privilege I have being independent. I'm not a State Farm agent or a Progressive or anyone else. So some of those agents only can sell you what their companies offer. So I can't pivot to a different company because this is the only company I have. So those are like captive agents. They're only able to sell their product. Okay. I'm independent. So I can say, okay, well, what this company won't do, this company will.
Oh, so you got a lot of flexibility there.
I do. I have a ton of flexibility. And then I'm able to say, okay, well, let's try this company. And if they say no, we'll go to this company. Or actually, let me run both of these companies at the same time and see which one gets the best offer in the end. Because my goal, even though I talk about a cheaper policy, my goal is not to give you the cheapest policy. I tell my clients, I don't want to get the cheapest policy. I want to get you the best policy. And the best policy might not be the cheapest. And that's where we with life insurance, the biggest mistake, especially my big thing, and I want to hit on children's policies whenever we can, but we want the most coverage for the least amount of money we pay. That only works when you're just focused on death benefit. But in a cash value scenario, you're being screwed over.
Is that right?
You're being screwed over. You want the least amount of coverage for what you're paying, because the least amount of coverage you're getting, the cost is low. And what did I say? Whatever don't go to the cost, go to the cash value.
So the cash value. Yeah. So, okay, you say you want to talk about the children's, but I don't mind that. Let's talk about that, because I got a bunch of little ones running around, but I don't have them covered. I have that. Of course, that's a decision that I have to speak with. But I have myself covered for my children. There's life insurance policies for the children.
There's a ton of, so like you have Gerber life insurance policies for children. You have Mutual Omaha children's policies. I tend not to go the children's whole life route. So when policies are labeled children's whole life, they're usually going to be anywhere from $10,000 to $50,000. So I just told you life insurance is, the first policy should be a permanent policy, right? And that should be the foundation. When do you insure your car? Do you insure your car after it got 100,000 miles on it, 200,000 miles on it, or do you insure the car before you leave the parking lot?
Before you leave the lot. So
we have children, and we want to wait. And then factors in life insurance: age, health, lifestyle, and we let our children get things begin to happen. Autism begin to get diagnosed at 3 and 4. Autism is a reason for them not to give you a cash growing life insurance policy for your child. Different diagnoses start happening at 1, 2, 3 years old, and we wait until get these policies on our children, thinking that their life isn't going to happen to them. But we know life happens to everybody. So that policy should be day one. You can buy a policy on your child as early as 14 days old. And it should be purchased at 14 days old. You have kids passing away from SIDS. You have kids that don't pass away, but kids who have leukemia, who get diagnosed with leukemia, where now the parent has to go to the hospital and take care of their child. But if they had a covered policy on their child, they could have accessed some of that death benefit early, because those are called living benefits, chronic, terminal illness riders, where you can access that money, take some time off of work so you can be able to support your child appropriately. And then let's not talk about the cost of insurance is the lowest the younger and the healthier you are. If you get a policy on a 14-year-old, you put $100 on a 14-year-old, a portion going to cover the cost of insurance, the other portion going to go towards their cash value. By the time that child is 18, that's going to be over $25,000 in their cash value.
Whitney, wow. I feel like this small. I feel this small. The reason why I feel like that is because when you said, you used the example, it is a gut punch too. When you buy your car, when do you get your insurance? Like, you're not allowed to leave a lot. The bank won't give you the loan until you have your insurance. And here it is. I got kids at the crib. We playing around, traveling. They're in middle school, and I got a baby. I didn't think about life insurance policy, but I did buy another car, and I had to get insurance before I left. I never thought of that.
And not even thinking about
because I'm protecting our car and not my kids.
We've had how many kids pass away in the Great Lakes this summer? Have you been noticing? It's been like drowning after drownings after drownings. Mm-hmm. So you're telling me that like we talked about, 3 to 5 days of bereavement. You don't have no coverage on the child. So even if you have $10,000, $20,000 of an emergency fund, so now you take $5,000 to bury your child that you wasn't expecting to pass away. You got 3 to 5 days of bereavement. So now you haven't gave yourself any type of money to grieve, to process, and that's taking the cash value off. You can get a regular life insurance. You can add your child on your policy if you do it at the beginning, a child rider, for $10 for $25,000. And that would at least cover if something, God forbid, happens. But I'm talking about even the cash value aspect, where that same $100 policy that I mentioned at the beginning, that's $25,000 in cash value at 18. By the time that child is 80 and passes away, or 90, it's over $2.3 million in death benefit off of that $100, which people spend in life insurance anyway, but they spend it on the later years versus the former years.
Right. Mm-hmm. Wow. No, and see, this was never broken down to me like this. If it was, then I would have made moves right away.
1,000%. I really agree. I really believe that if you give people their options, they will take the best option. But unfortunately, we're in a situation where people just don't know. And even the insurance agents really don't know. Like, no one broke this down to me. You know how I figured this out? Mm-mm. I was buying a policy for my daughter. And every time I would go to do a children's policy, I would get like sick to my stomach. And I feel like it was God. He was like, why won't you give her a policy like yours? Like a permanent, just regular policy. Don't do children's, just do a regular. So I began to run the illustration. Mm-hmm. And I was like, oh my gosh. I just started seeing the cash value. I'm like, she don't have like 30 grand of cash value. This can help her start a business, a down payment on a home. This can help her.
Yeah, a lot. And then, yeah, I'm speechless right now because
a lady putting $1,000 a month on her daughter and a cash growing policy. She want her daughter to have $300,000 by the time she's 18. She said she never want her daughter to ever have to go to a bank in her life. She want her just to access the money from herself and pay herself back. So instead of paying student loans, she'll pay herself. Instead of paying a mortgage, she'll pay herself. And that policy is going to keep getting bigger and bigger and bigger and bigger.
Did she come in with that knowledge, or did you help educate her with that?
I helped educate. She came in knowing what she wanted.
Okay.
And she's like, she came in knowing what she wanted, but then once she wanted somebody who can explain it to her.
Gotcha.
Because I would have never been like, I wouldn't have thought someone would be willing to even sacrifice that much. So I probably wouldn't even came in with that. But when she told me what she wanted to do, like I say, I listened to what you want. And I was like, well, this is how you do it.
You give the energy of when you talk to people, you're not talking to them as a number. You're talking to them like a family member.
Absolutely. These my sisters, my brother. I mean, these kids, I be getting emotional, like when I'm doing the illustrations, I'm like running these numbers. I'm like, oh my God, this kid is going to be so good. I get emotional because I'm literally like changing lives.
You
like,
are.
I'm changing. Like I don't take that lightly. Even though sometimes when I don't want to like hop on a call or I don't want to make a post, I'm like, someone who is giving bad information is.
Yeah. And the information that I'm learning from you, it can change the trajectory of me too, but my children.
And that's the thing. I tell people all the time, people in their 30s, 40s, they on social media, they hear about like IULs and they want to put all this money in it. I say, look, make sure you have a foundation policy, $50,000, $100,000. Put that money on your baby. Not to be, no offense, it's too late for you. Your mama should have did that for you.
Yeah.
Now put it on your baby.
I
Invest
agree.
it in them.
Yeah, I agree, because that right there, an extra 50,000 or 60,000 in college, coming out of college, that would have helped me a lot, and to do that, to be, I want to say, selfless enough to look out for your children and purchase a life insurance policy, but not just purchase any policy.
Not any at all. It has to be built right. It has to be the right policy. All of that is so important because anybody can just kind of put you in anything. Like, and that's the thing, when you have especially, you have insurance agents who sell life, car, home, they can't be an expert at all that. Like, they just gonna be like, just gonna go into their, just the day-to-day, like, okay, putting it in. I do life insurance so much. I build so many children's policy. I do events. I'm actually gonna be in Atlanta next week. And the event, I talk to moms, is a babies and bumps event. And I tell moms all the time, I said, the average agent might be selling 1 to 2 children's policies a month. I sell 1 or 2 a day. So when I had a lady who was writing a policy for her son and she wrote it with someone else. And she was like, yeah, I already wrote this policy with them. And as we're talking, she mentioned he had autism. And I was like, oh, he won't get that policy. And she was like, oh, she didn't tell me that. Maybe it will. I said, I write with them all the time. That's going to be a denial. And she called me a week later and said, you were right. It was denied. But because I had that, I would have saved her that whole process of doing the application for something I knew was going to be declined.
Whitney, where can we find you? If somebody's out there right now is like, I need a life insurance policy, or I need to change my life insurance policy, where and how can I find you?
So my company is called Your Family, Your Legacy. It's yourfamilyyourlegacy.com. It's Your Family, Your Legacy on Instagram. It's Your Family, Your Legacy on Facebook. It's Your Family, Your Legacy on TikTok. So Your Family, Your Legacy is where I'm at across the board. I do 30-minute free financial planning calls. I actually allot an hour, but I just say 30 minutes just so people don't feel like they're obligated to be on the phone with me for an hour. But I review current policies and just make sure that they're going to be a good fit. They're still a good fit. And I tell people all the time, you're in a good place. Like, I have enough business. I don't have to try to take you from something that's good. It makes no sense. There's a 2-year contestability clause in each life insurance policy. That means that life insurance company can contest a death and say, you know what, he was diagnosed with this before he got the policy, or he was dealing with this before he got the policy. After 2 years, they can't contest it. Why would I take someone out of that 2 year? Because if they're already past that with a company and it's a good policy, why would I take them out and make them start that all over?
Okay. The fact that you said that says a lot about yourself, because you know how many people would jump at the opportunity. Oh, that's more money in my pocket. That's another notch on my belt.
But I'm putting them in a worse. I could be putting them in a bad situation, because now this insurance company just can start that contestability. If something happens to your mom, now they can say your mom had cancer before, or your mom had this already. So I would never put, unless, like I said, this is literally a better position, I would never put someone in that scenario.
That right there is, you're a rare breed, especially in this line of work.
Absolutely. I agree. I think there's a lot of great people, but not a lot of great in this industry.
Yeah, because in this industry, there's not a lot. In this industry, I get the idea that they go to where the money is. They go to where it's a for sure thing, and that, like you said, there are some, they go through this policy or that policy with these companies, and it's always this or that, this or that. Whereas you come down to the minorities, to our community, and you're like, hey, yes, it's this or that, or it's those, or it's that. And you're providing options, letting them know that your life is insurable, and I can find the right policy for you. You that's a call for service.
No, it's I love it. I love what I do. I tell people, like, this is a good option. This is a great option, and this will be the best option. The good option can get to the best option. So if I put you in a good option, it can become the best option, because I'm going to leave room for it to be the best option. and it's still good. But good option might be $30 a month. The great option might be $80 a month, and the best option might be $130. But they might can't do the best. So I say do the good because I'm going to put you in a position where you can eventually do the best.
Whitney, I'd salute to you on that one. That is awesome. You probably got a new client here because because as you're talking, I'm reevaluating some of the things that I'm dealing right now. Granted, I'm way past the 2-year mark, but here's the next question there. How many policies can one have?
You can have as many policies as you want, but I don't believe in having a whole lot of life insurance policies. Like, I don't believe in because I remember when I first started and I was like going to all these random events because I didn't know where I would find my people. And I remember people saying, well, you can't have too many. I'm like, yes, you can. Like, well, why are you spending $1,000 on life insurance? You know, like, it doesn't make, you can have too many. Like, get the right ones to work for you. Like, don't have all this stuff. It's like having 8 cars in the driveway that you only can drive 2. I'm like, why? Why do you have all of this? Like, for what? You could be putting that money in other places. You could be putting that money in maybe a 529 plan for your child. You could be putting that money in a brokerage account. You could be putting that money in other places. Don't put all the money here. Put enough here.
You got a heart for people. I can tell that right now because of how you approach. You have a heart for people. Like, this isn't the best one for you. And I have a feeling that you've turned away some work.
Absolutely.
Because, like, hey, I'm not the best option. What you have right now is good. Stay there.
Absolutely. I have. But to be honest, not many. Because many people, I haven't. Like, the other day I had one lady who, it was good enough. And I kept telling her, I'm like, this is good enough. I'm like, I'm telling you, what you have is good enough. If you stayed here, I would not be mad at you. I'm going to show you what I would have done.
Uh-huh.
But this is good enough. So you take that, take what you have and know it's good enough, and then take what I would have done, and you figure it, and you go from there. I don't want to make that decision for you.
That's awesome. No wonder you're doing well. No wonder you're doing well. So as we get ready to wrap up, we've got like 2 minutes left. First question is, how long have you been doing this independently now?
This is my 2nd year.
Your 2nd year doing this, and you're doing well. Overall, how long have you been in the life insurance business? 8. Mm-hmm. So as we come to a close, obviously you're no rookie. So as we come to a close, for those that are listening and watching, as you said that you would help and talk to younger girls as an example, what would you say to someone coming up in this industry or to someone trying to figure out life insurance policies? What advice do you have for them?
I would say don't make an assumption. Don't make assumptions. Figure it out for you. Don't let someone else's experience be your experience. I've seen people try to kind of replicate me since I've been doing this, and it never works out. Like, be you and figure out how you can fit in your own lane in this industry. Because there's so many areas that I would love to hit on, but they're just not my lane. And I'm really waiting for people to hit on those areas. Yeah. Like, why isn't no one touching on this? Like, that's the big deal. Like, even married people with no children. That's a huge missed opportunity for insurance. There's policies where they have fertility riders to help people have kids. So you have a married couple that just get married and you tell them, let's add this rider on just in case. And they're in a situation where they do need help. And now you have added that rider. You just allow them to be able to get those treatments. You know, that's a space that I haven't tapped into, but it's a space that could be tapped into, you know? So I would say just kind of build your own lane and don't assume. There was 2 things I wanted to touch on. One, suicide does not automatically mean a policy will not pay out. It's a 2-year suicide clause. If they commit suicide after 2 years, still put in a claim. If it was before 2 years, still put in a claim. There's billions of dollars that go unclaimed in life insurance.
Because of suicide, they think.
No, because people just don't know. People don't know where the policies are. People don't know who the beneficiary is. We don't talk about it. That means billions of dollars. If you watching this, go on Google. If you have anybody in your family that passed away, type in unclaimed life insurance payout. It's going to be a website. It's like NAIC. Put in the information and they'll tell you if there's money that belongs to you. Like, there's just lack of communication, lack of knowledge, and billions of dollars are just sitting there waiting for families to collect them.
Wow. I'm definitely checking that site out for sure.
Absolutely. Because you don't know. People sometimes have policy here they just didn't tell you about.
Yeah,
and
it
you be
had a
like,
policy tucked away.
wow,
Yeah.
yeah.
Well, Whitney, thank you so much for coming out. And this was enlightening. I tell you right now, this could go on forever because I want to pick your brain. I'm still going to pick your brain even when this camera goes off. So I want to thank you for taking the time out. Though.
Absolutely.
I appreciate
Thank
that.
you for having me. This is great. You're a great interviewer.
Oh, thank you. You're a great host. I appreciate it. I appreciate it. Thank y'all for watching Backyard Dollars. We'll catch you next time.
Bye.